After looking at the thumbnail of this video, it may look like a clickbait video, but let me tell you that it's not a clickbait video. If you watch the video till the end, then if not successful, at least you can be a better trader than whatever you are earlier. And you implement all the points which I discussed in this video. So now let me tell you why I am making this video. Couple of days back, I was conducting a daily webinar, that is our pre-market and end of the day chart analysis webinar. In that, one student asked me that he has been regularly attending my webinar, he has been watching my YouTube videos, but in the live market many times, even though he knows that where he has to take a long trade, where he has to take the trade, still he is not able to become a consistently profitable trader. That means he knows how to read chart, he knows price action, everything he knows that, but still he is not able to become a good trader. Like him, many of you also facing the same issue, that is, you know price action, you know technical analysis, you are very good in analyzing the charts, everything, but still you are not able to take good trades. Still you may be a losing trader or a break-even trader. So how to overcome this from a break-even trader to become a profitable trader? That is what the objective of today's video. Yes, in this video, I am going to discuss that important thing. That is what they say, that 90% of traders fail in stock market. Only 10% of traders, they become successful in stock market. And the reason is, it's not about any strategy, that they don't have strategy or something like that. It's all about trading psychology. So that means if you can't master trading psychology, whatever the strategy you use, you can't become a successful trader. So in this video, I'm going to discuss about 10 lessons I learned after reading the book Trading in the Zone by Mark Douglas. I have already mentioned about this book in one of my earlier videos also, that this book really helped me in my trading. I was working in Dubai in year 2016-2017. That time I was very desperate to leave my job and come back to India and become a full-time trader. I was fed up of doing my sales job, marketing job, and I really wanted to become my own. So I was reading books after books. I was going through YouTube videos, strategies after strategy, thinking that only thing to make you profitable trader if you have a good strategy. So I was trying every strategy, and I was following one of the very successful trader from India. And he is a price action trader. Even I wanted to become a price action trader. And in one of his books, he mentioned that after reading the book Trading in the Zone, totally his trading life changed. That means from a losing trader, he became a profitable trader. And that was enough for me to purchase that book. Just like how most of you only focusing on strategies to become profitable trader, those days I was also desperate for strategy. And when I saw the heading of that book, Trading in the Zone, I was very much attracted, because I was only thinking about supply zone, demand zone, all this price action concept. So I was thinking that this book have some important zones which he is going to discuss, maybe related to supply zone and demand zones, because book says that it is trading in the zone. So that means I was thinking that he talks about buying at one zone and selling at another zone, or selling at one zone and buying at another zone. So I was under that impression. And when I received the book and when I opened the book, I could not read more than 10-15 pages, because I was thinking that he'll discuss about the charts, price action, demand zone, supply zone, but nothing was there. It's all about story, about psychology and everything. And I was very disappointed, and I decided this book is of no use. And I stopped reading it after 10-15 pages. And after over the period of time, after jumping from strategy to strategy, when I have not seen any consistency in my trading, then again I realized that it's not only about strategy, it's all about trading psychology. That is what makes you better trader. And again I opened that book, Trading in the Zone, and that time I read entire book. And let me tell you that that book is really very good if you are a trader who is having an issue with psychology, who is good in price action, good in technical analysis, but not able to take good trades. So in this video, I am not recommending that go and start reading entire book. You can read the entire book. This book is almost 240 pages book, and many people may find too lazy to read this book, because this book is more in theory and many people don't like reading. So for them, if you don't want to read this book, in this video, I'm going to discuss 10 lessons which I learned after reading Trading in the Zone. So that means you don't have to read the book. Instead, watch this video till the end, because from that books, I'm going to discuss 10 important lessons which Mark Douglas discussed, so that you can also learn how to become a successful trader, how to become a better trader, what are the mistakes you are doing in trading, and how to become better and better in trading. That is what I'm going to discuss in this video. So I made a small presentation where I discuss bullet points one after another. So watch the video till the end, and hopefully it should help you in your trading. Okay, now let me start with this presentation on 10 lessons from trading in the zone. And the first lesson, which Mark Douglas says, that you should learn to embrace risk. That means learn to embrace uncertainty in trading. So, what is the meaning of that actually? So, every lesson I am going to detail and I'll explain you what actually meaning by that by Mark Douglas. So, when he says that learn to embrace risk, that means most of the traders, after taking the trade, they expect price to go in their direction, right? You have taken a long trade here on this candle. You want price to go up, right? You want price to go up. That is the only time when you make the profit. See, back of your mind, you always know that trading comes with the risk. Losses happens in trading. Stop loss hits in trading. In back of your mind, you always knows that. But in the live market, you only expect market to go in your direction, right? But does it happens every time that once you take the trade, it goes in direction? No, right? Sometimes it can come down after you take a long trade, or it can stay sideways. So that is what Mark Douglas says. When a trader comes to the market, even back of his mind, he knows that trading has a risk, everything. And if it doesn't go in the direction, it leads to anger, disappointment, and sadness. That is what Mark Douglas says, that if the trade doesn't go in the direction, they go mad, and it leads to anger, disappointment, and sadness. So, what Mark Douglas says in Trading in the Zone, that every successful trader in the world knows that every trade is random. Every trade have a uncertain outcome. That means everybody knows that there is no guarantee once you take the trade, it has to go in your direction. So if you accept this uncertainty of trading business, then you don't keep big expectation. That means once you take the trade, you don't expect market to always go in your favor, because you already accepted that market is random. So if your position doesn't go in your direction, it won't lead to anger, disappointment, or sadness. So what he says, that first accept the uncertainty of trading. Okay. So that is the first lesson from Mark Douglas. Next, second lesson, he says, see, this lessons doesn't mean that exactly whatever is there in the book I've taken in the same order. It is not in the order. I've taken 10 important points from the trading in the zone and I'm putting here in the PP. Not necessarily it has to be in the same order. Okay. Lesson two is don't fall into gambler fallacy. Gambler fallacy is a false belief that if one event happened consecutively, then it occurs less often in future. And most commonly used word in Hindi, that is aur kitna girega. If a stock is falling, non-stop falling, then people try to buy that stocks. What they say that, अरे इतना गिर गया और कितना गिरेगा, right? That is what they think, that already market fell this much, now it has to go up. But remember, not necessary. Market can keep going down like this. So that is what one of the example of gambler's fallacy. When you first toss a coin, you know that falling head or tail is 50-50, right? You take a 1 rupee coin and toss it, you know that chances of falling is only 50-50. Either it can fall or it can fall tail. But 4 times consecutively it falls head. Okay. Means first 4 times it is falling head. Then what happens fifth time? Let me give you an example that you started tossing the coin. It started falling head first time. Again you toss the coin. It started falling head. Again you toss the coin. It started falling head. Again you toss the coin. It started falling head. Now my question is, what is going to happen fifth time? Okay. So fifth time when you toss a coin, what happens? What likely to fall fifth time? I'll give you 5 seconds. Take 5 seconds and take a guess. What do you think? 4 times it's falling head. Fifth time, what it will fall? It will fall head or tail. Take 5 seconds. I'll just count 1 to 5. 5, 4, 3, 2, 1. And if your answer is 4 times it's fell head, now fifth time it has to fall tail. That means you have gambler's fallacy. So what is the right answer? Anything can fall, anything can come. Okay. still it's a 50-50 chance. Fifth time also, it is still a 50-50 chance. You can't say that last 4 times it fell head, now it has to fall tail. That is called gambler's fallacy. That means coin doesn't have memory. You know that it fell head 4 times, but does coin knows that 4 times I fell head, now I have to fall tail? Coin doesn't know, right? Same in trading also. For losing trade doesn't mean that fifth time you will have a winning trade or vice versa. Suppose 4 times your trade hitting stop loss one after another. Don't be under impression that fifth time now it has to hit profit. और कितना बार मेरा stop loss खाएगा, अभी तो profit देना ही है. That is what the mistake happens. That is called gambler's fallacy. Just like how coin doesn't have a memory, market also doesn't have memory. You know you had 4 losing streak, but market doesn't know that. So that means 4 times you made a loss. Fifth time, don't take a big position thinking that 4 times my stop loss hit. Fifth time I have to make profit because it can't eating my stop loss, right? Fifth time also, again, it is 50-50. So when a trader goes through the winning streak, he thinks he got a holy grail strategy and becomes overconfident. But same trader, when he goes through losing streak, he gets frustrated and he thinks strategy stopped working and he starts searching for new strategy. So that is what every trade you should know that it is random. Next lesson, Mark Douglas says you should think in term of probability. Okay, what is the meaning of that? That means he says that successful trader thinks in term of probability rather than result of one trade. Like most of us, one trade hits stop loss, we get upset, right? Many traders don't even get the sleep if that stop loss hit. But the successful trader, they know that one trade can fail or win, but over the long term, they win because they have a system which has a edge over the large sample. What is the meaning of edge? That's I'm going to discuss in the coming slide. That means they have a strategy which they have back tested over the long period of time, and they know that that strategy can have stop loss here and there, but over the long term, it works. For example, you have taken a 20 trades. You can see that sometime it will be red, sometime it will be green, sometime you'll lose, sometime you'll win, right? That is how it happens. So if you have a trading system which has an edge, that means you have a back-tested strategy which has an edge, that means it can have a losses here and there, it can hit stop losses here and there, but overall, you know that it gives you profitable trade more than losing trades. That is what the professional traders, they don't get upset if their stop loss hits because they know that here and there can be a stop losses, but over the period of time, they are going to win. Next one, that is Mark Douglas says, have a system which has a edge over the long period of time. So here I'm going to discuss what actually mean by edge. Edge means having a system which has a higher probability of one happening over the other. What I mean by one happening over the other, that means you have a strategy which gives you winning trades more than losing trades. That's what I mean to say, one happening over the other, right? So edge means nothing but you have a strategy which works most of the time, but not all the time. If I had to give you a simple example, this is that entry at retracement back to 20 MA. Okay, this is one of your strategy. You think that simple strategy. Whenever price comes near the 20 MA and when you see bullish candle, you take a long. So assume that you have made a back testing of this strategy and over the 20 setup like this, whenever you see that this kind of trending day, whenever market came near the 20 MA, you went long on the bullish candle. You have seen that 12 times it wins, 8 times hits stop loss. For example, you can see that here it gave you profit, here it gave you profit, here it gave you profit, right? Here it gave you loss. Here also did not give you profit because it reversed, right? So that means you have a set strategy. Most of the time it works, but sometimes it can hit stop loss also. So that is what known as edge. That means winning most of the time rather than losing. So next one is every moment in the market is unique. That means few days back you have seen a price action setup working very well. But same pattern again happened after a few days, but it did not work. So what he says that don't expect same outcome as earlier. It may happen or it may not happen. You can see that both are nifty charts, both are 5 minutes time frame, both you can see that trending days. You can see on your right side here also 20 MA, both 20 MA, and whenever you taken a long trade near the 20 MA, it gave you profit, right? Whenever you took the trade long trade, it gave you profit. But same time on the left side, you can see that you went long near the 20 MA, but it didn't work, right? It started coming down and your stop loss hit. Here it gave you good profit. Here it gave you nice profit, but here is your stop loss hit. Similar trade setup, right? Trending 20 MA, both side. You have taken a long trade near the bullish pin bar 20 MA. Here also you have taken a long trade. Here it worked, here it failed. So that is what he says, that every moment in the market is unique. Every setup is unique. So don't think that last time it worked mean every time it has to work. And the next lesson he says, anything can happen in the market. And this happens to be one of my favorite sentence also. Because if you followed me in my webinar or in my YouTube videos, I keep saying that anything can happen in the market. Even I keep saying that anything can happen in the market. So that means in trading, always in your mind, you should know that anything can happen in the market. Because you should know that there are millions of traders for trading along with you. So some with long position and some with short position, right? Some take a long trade thinking that market will go up, and some will take a short position thinking that market will reverse, right? Every trade, you know that there are both buyers and sellers, and eventually one has to win and one has to lose, right? So it is impossible to be right in every trade you take. So that is why don't fall for all these gimmicks which you see on Telegram and all this 98% win rate, 99% win rate, and all this. It's not only difficult, it is impossible to be right in trading in every time. And that is what Mark Douglas says. So that's why next time when you take the trade, remind yourself anything can happen in the market. Next one, that is Mark Douglas says you don't need to know what happens next to make money. Many people think that if you want to make money in trading, you should know what is going to happen. Tomorrow market will go up or go down. You should know well in advance, then only you can make money. But Mark Douglas says to make money, you don't need to know what happens next. So don't predict the market, but react to it. What actually meaning of it, right? It sounds very nice to hear. Don't predict the market, but react to it. But actually, what is the logic of saying it? That means, just I given you one example. Look at this chart. You can see that this is the Bank Nifty chart. You can see that there are some resistance here. So you can see that somewhere here, Bank Nifty having a some resistance, right? It is coming near around that level and it is getting rejected. Finally, in the afternoon, one bullish candle came and broken that resistance and started going. So that means taking a long trade here, thinking that market eventually going to break, that is called prediction. Okay, you are predicting the market, not reacting. But only taking the trade after the breakout happens, that is called your react. So that means before even breakout happens, you think that, oh, market is going to break now and I'll take a long trade. That is, you are taking the trade on prediction. But once you see that breakout happened with a bullish candle and then you take a long trade, that is what he says, that don't predict but react to it. Next is, he says that there is always a random distribution of wins and losses for any system. What is the meaning of that? Suppose you have a system with 12 wins and 8 losses. Means you have a system with edge. What is the win rate? If you have a system out of 20 trades, 12 trades hit target, 8 times it hits your stop loss. That means you have a 60% win rate based on your past performance. That means based on previous back testing, you have identified that which have a 60% win rate. Same time, remember that if it has a 60% win rate, doesn't mean that it will keep giving profit 60% of the time. It can happen that that strategy have a 60% win rate, but first 4 trades hits your stop loss. 4 trade hit your stop loss, then one winning trade against stop loss. Just tell me how many of you have believe in that system or strategy where you have applied that strategy and one after another, four time hit your stop loss. Many of you will discard that strategy thinking that it's a useless strategy, it doesn't work for my back to back stop loss hit, right? But over the period of time, what happened? Over the period of time, over the longer period of time, you can see that there are winning streak. And finally, how many wins and how many losses you have seen? You have seen that 12 wins and 8 losses, which is 60% win. That is what Mark Douglas trying to say. If you have a strategy with 60% win rate, doesn't mean that the moment you take the trade, it keeps giving you profit non-stop for 60% of the time, nothing like that. Okay. It can also happen that it can start with a losing streak and then it can turn into winning streak. That also can. That is what he meant to say. There is always a random distribution of wins and losses for any system. So that is what again I want to repeat. Outcome of single trade is always random. It's always random outcome of single trade. But over the long run, you win because you have a system with edge of almost 60% win rate. You have to look at overall after a big number of trades. And lesson 9, he says, have a carefree state of mind while trading. So carefree doesn't mean that being casual in trading. Okay. It is not that being casual in trading, but carefree means taking trades without any hesitation or fear about the outcome of the trade. That means not having any fear or any hesitation once you take the trade. Because once you take the trade, you are now under the mercy of market. Once you punch the order, buy or sell order, now you have no control to take market up or down. You can't decide once you take the trade whether market has to go up or down. So place your stop loss and let market decide the outcome. So how you can get the carefree kind of attitude in the market? It can happen if you trade a system with an edge. What I said with an edge, that means you are trading with a system which have a higher win rate. It has historically proved that it works most of the time. So when you know that you have taken the trade based on that system, which has an edge, which has a high probability of winning, then you will not have any stress or you will not have any fear. Because even though your stop loss hits, you know that over the period of time, this strategy have a edge. So again, you can overall turn into the profit. And finally, lesson number 10, that is overcome all your trading fears. So he says that four primary trading fears why 90% of traders lose money in market because of fears like being wrong, losing money, missing out, that is what FOMO, and leaving money on the table. These are the four important things he says that where trader lose money in the market. First one is being wrong. Being wrong means what? You have taken a trade and you are scared about being wrong. It could have happened that you have taken a trade and you have, once you take the trade, you have started putting in on Facebook, Telegram, Twitter, LinkedIn, Instagram, everywhere you started putting that I've taken a long trade on this stock. And after that, you will be in fear because if that trade doesn't work, then people will laugh at you. Your friends will laugh at you. Your followers will laugh at you. You have taken a long trade and your trade has failed, right? That is what people are scared of being wrong in the market. So that's why Mark Douglas says in trading, be comfortable being wrong because not a single trader in this entire world who has never gone wrong. Okay. Every trader goes wrong. So in trading, it's not possible that you will be right all the time. Second is losing money. That means when you take the trade, you always in the fear that if stop loss hits, I lose money, right? You always under fear of losing money. So that is why in trading, if you have that kind of issue that you always under fear of losing money, then trading doesn't suit. So that's why you should take losing money as a part of expenses of any business. Any business, you have so many expenses, like you have to pay salary to your employees, you have to pay the rent for your office, you have to pay for other charges like electricity bill and all this. There are many costs involved in any business. But trading, we don't have all this additional cost, right? So that is why take your losses as a expense of doing the business. Next one is FOMO, fear of missing out. Don't suffer from FOMO. For some reason, If you miss the opportunity, remind yourself market opens 5 days a week and it is open almost 20-22 days in a month. If you miss the opportunity today, then tomorrow again opportunity can come. And finally, leaving money on the table. That means once you take the trade, the moment trade goes in your favor, taking money too early. That means you are in the fear that if I don't take this profit, my profit will turn into loss. That is another kind of fear. That means not following the risk reward, taking small profit and taking big losses. So that is what not following the risk reward. So these are the four important fear which makes traders not to become successful in trading. And that is what Mark Douglas clearly explained this all 10 lessons in his book Trading in the Zone. So, okay guys, that's about today's video on 10 important lessons I learned after reading Trading in the Zone. I hope you have really liked the video and learned something new in this video, because while making the presentation even I was enjoying, because trading psychology is one of my favorite subjects, because trading psychology is one thing which stops from a failure trader to become a successful trader. So don't ignore trading psychology. If you are not understood entire video, watch this video again and again so that you can become better at trading. And as you know that we have started a new series, that is the daily webinar on every market days 8 to 9 a.m. where we discuss pre-market and end of the day chart analysis. If you are interested, you can check the link below this video and you can be part of this webinar. Other than that, our other course like day trading course, swing trading course, scalping course, options course, all are available at our website. If you are interested, you can check it out. So that's it guys. I'll see you soon with a new video. Until then, bye and take care.